Revenue front 8% up quarter on quarter. Even the PAT is almost up 8.2% quarter on quarter. But then let's dive deeper in this. We have Mr. Arun Jain, Chairman and MD, Intellect Design Arena. Hi, good morning and welcome to the show. Let's talk about PAT. The figure is almost 94% year on year basis, 102 crores, and revenues up 34%, almost at 758 crores. Would like to understand what are the key growth levers this quarter?
Hello, I missed some communication link here.
Sure.
Can you repeat the question?
Not a problem, sir. I'll just repeat that. So I was talking about the growth levers that we saw in revenue as well as PAT. The numbers have come quarter on quarter as well as year on year basis. We've seen a jump.
Yeah, so I think the whole strategy what we put together in April 24, and we moved to the Europe and America as a market, and eMAG.ai becomes a centerpiece. The way beauty of eMAG.ai in understanding customer, where we put customer first design and operation first design in the front, is driving the change and acceptance of our product. And we forecasted last year that it will take 1 year for us to move to become acceptable by creating a reference site. And I think exactly it's working as per that, because there is too much pain in the legacy system, mainframe application in the global market. The market size is too huge for composable and contextual market. So this is driving the growth on one front, along with the Purple Fabric, which is my business impact AI platform. So both the levers are working simultaneously to see the outcome by the investor right now.
All right, but how's the sentiment with respect to the international geographies, specifically the US and the EU geography? What's the sentiment on ground, if you can give us some sense, and getting more orders, getting more repeated clients, what's the visibility there?
In US and Canada, the North America market is almost growing twice the market other markets are growing, and because I think they have a more legacy platform sitting there which they require to move to the cloud. So mainframe to the cloud is a bigger market opportunity, and for us, whether it's a Europe is concerned or America is concerned, who are in a bank tech wave 1 to bank tech wave 2 and 3, they are the most important player to migrate, and these deals are bigger in size, more sticky in size. My platform revenue has grown more than 200% in 1 year because of Central One acquisition plus our whole traction on eMAG.ai. These are the things which is driving us. So to us, US is a very, very promising market to us because we are not dependent on H1 visa, or we are not dependent on any of these things. We are participating in a core technology agenda of USA, and which is we are well positioned there.
So also you've guided for long-term growth by investment in your 7.2 lakh square feet facility in Suruseri. What timeline do you envisage for ROI and commercialization on this?
This facility is coming for co-innovation center with a customer of the eMAG.ai. This will take 2 years time to commercialize this facility. Maybe 18 months we'll start using some floors of this facility, which is in the part of the campus itself.
All right, but now let's touch on your margins as well. This time, very strong margins that we have seen. They have improved very smartly, but with the continued investments, how sustainable is the margin expansion? What's the outlook there?
I think we are in a product business. I think we have to explain the margin will grow because AMC grew 20%, 19% AMC growth, 200% my platform growth. So my incremental cost to service is much lower. So half year growth is 26% on revenue and 46% on margin. I think that element which I earlier suggested, 20%, we designed the business for 20% growth and 30% margin growth. That is a part of the embedded business design and model design, because over the period of time, product always give more profitability on my AMC and license link revenue. Now my license link revenue has crossed 50%. This quarter we achieved license link revenue of 55% compared to license link revenue few years back was as low as 35%. So all the license-linked revenue drives the margin.
So let's talk about some risk factors and challenges. Are there any risks such as deal slippages, competitive pressure, or currency movement that could challenge the current outlook?
I think major deal shifting quarter on quarter is always a risk, and investor has to always discount that because they look at over the last 3-year period what we are promising and what we are delivering, because investments are supposed to be in product company for long-term duration. But looking at the overall risk in the company from today's perspective, I think the risk is how much opportunity can we capitalize or not. Today we are cutting edge. We have a technology. Our R&D team has designed the technology which is at least 18 months ahead of my competition. Are we able to capitalize that 18 months period, the moat, and drive the noise in the market and acceptance in the market in the next 18 months? That is important for us to keep the pace so that we generate in next 18 months next level of technology to drive the change.
All right, we'll watch out for all of those triggers. But Mr. Jain, so good having you on the channel today. Thank you so much. It's been a strong growth for the company and definitely respected in the stock price, as well as the investors are also cheering the kind of strong numbers that you have posted. But thank you so much for taking the time out and speaking with us.
Thank you. Thank you.